Vaccine hopes and weekly F&O expiry pressures keep the Sensex and the Nifty higher in choppy trade. IT stocks surge on better outlook. Auto stocks focus on rural areas also gain. The mid-caps underperform in trade. And Infosys surges after its results beat street estimates, and the company provides an upbeat guidance. Brokerages upgrade the stock, and analysts eye a silver lining for Indian IT companies in a shift of business from captives. The Vodafone stock takes a drubbing as the market digests the Google Jio deal. Retail competitors too feel the jitters as stocks of Avenue Supermarkets and Future Retail dive in trade. And imports fall sharply in June by 48%, leading to a trade surplus for the first time in 18 years. The exports fall only 12%. Economists say COVID-led lockdown impacted imports, which may take a couple of months to correct. The rupee remains range-bound. Hello and welcome to Business Lunch. I'm Nigel D'Souza, and as we speak, well, the markets are trading with some green, so that's pretty good news. But the reason that the Nifty is holding up is because Infosys, that zoomed in trade after the company reported a big beat in the first quarter. The margins came in higher and deal wins remained steady. Rima is with us to run us through the key highlights. Rima?
Absolutely. A clear all-round beat in Q1, both on revenues as well as margins. They managed to stem the revenue decline to just a 2% fall and expand margins by 150 basis points. So Q1 was a big beat. Also, the other notable feature was that the performance was far superior to TCS. So TCS in the June quarter had a revenue fall of 7% and their margins declined by 150 basis points. So the performance of Infy stands tall when you compare it to its closest peer, that is TCS. Also, it's given a very strong guidance. They've guided for growth in FY21, which came as a surprise to many people, 0 to 2%. They've said margins will be in the 21 to 23% band, which means if I compare it to last year, there is a very high likelihood that margins will expand in FY21. Brokerages, no doubt, are upbeat. They've raised the EPS estimates by 7 to 8%. The target multiple too has gone up. Nomura upgrades the stock to a buy. Citi and CLSA has pegged the target price at 1,000 rupees per share, which means still some more upside to go from current levels. The stock, remember, was trading at a near 25% discount to TCS prior to today's up move. So with this gain, up move you're seeing in Infy, the valuation discount has narrowed, but there is still a discount which prevails compared to TCS. And Infy, remember, would outperform TCS in terms of growth in all likelihood for the second time this year.
And Infosys, the CEO and MD, Salil Parekh, says that the economic uncertainties in several markets remain, though he guides for revenue growth of around 0 to 2%. Let's listen in.
Coupled with our strong Q1 results, this gives us a powerful foundation for the rest of the year. Notwithstanding the large stimulus programs in the US and Europe, there are still economic uncertainties in those markets as there are still emerging medical scenarios. However, with what we have learned in Q1 and ongoing strong client connects, we feel the strength of our franchise is coming through clearly. And with that, we will reinstate our guidance. For the full financial year, our revenue growth guidance is 0% to 2%. Year-on-year growth.
Let's turn our attention away from the IT companies and let's talk about banks then. Federal Bank, that's up in trade, reacting to a stable set of earnings for its first quarter. Now, the loan growth came in at an 18-quarter low, but let's hear out what the MD and CEO of the bank had to say on its moratorium book.
At this juncture, the track that we see is quite encouraging. In terms of the net moratorium is 24%, which is about 33% improvement from May end, which is when we presented our full year results. I don't think we must make much of the moratorium information yet till August end. You can't tell how people will behave, but indications are it's trending the way we would like it to. But I maintain the last 10% is the real challenge, right? Because like I told you a while back, the people who have taken the loan were given the loan because they were both capable and willing.
Well, Bandhan Bank, on the other hand, is lower in trade. Its Q1 earnings were impacted due to elevated provisions. Now, the bank's MD and CEO, Chandrasekhar Ghosh, clarifies the bank has no immediate plans to take the OFS route. Let's listen in.
We are now full bank as the people are busy on that is in this the COVID situation, how we can be provide the support to my customer and the bank strength will be like to increase on that. So this is not we are thinking in the OFS. There some of the borrowers they are also we are giving the loan to them as a top-up loan. Very few that maybe the 10% of the total loan. Why? The earlier we are with only the one loan to the one customer. And 6 months before, we are understand about it that where their loan is going to close, that time they are going to the another lenders to take the loan.
Well, Reliance Industries chairman Mr. Mukesh Ambani laid down the roadmap for India's largest conglomerate at its 43rd AGM yesterday. Let's quickly take you through the key announcements. Now, Google joins the Jio party, will invest 33,737 crore rupees for its 7.7% stake in Jio Platforms. The Jio-Google partnership could shake up the mobile phone market as they would join hands to develop an Android-based operating system, and the OS will be used to power Jio's entry-level 4G and 5G smartphones at a fraction of a cost. Now, Mukesh Ambani also said that Jio is ready with a world-class 5G solution. Telecom aside, RIL chairman also laid down the blueprint for Reliance's retail expansion. He said the company will induct global partners and investors into Reliance Retail in the next few quarters.
Let me welcome Google to be our strategic partner in Jio Platforms. Today, we have signed a binding partnership and an investment agreement with Google, under which Google will invest 33,737 crores for a 7.7% stake in Jio Platforms. With this investment by Google, strategic and financial investors have committed a total of 152,056 crores in the last few months. Dear shareholders, today the world recognizes our hyper-growth, inclusive retail and new commerce model. We have received strong interest from strategic and financial investors to invest in Reliance Retail. We will induct global partners and investors in Reliance Retail in the next few quarters.
Well, we also spoke to Shankar Sharma of First Global as well as Sunil Singhania of Abacus Asset Management on the big announcements made at the RIL AGM yesterday. Let's listen in to what they had to tell us.
You see just Jio as the mobile company, and it's, I think, $8 to $10 billion annualized revenue. You could safely, and with obviously the tech piece to it, if it's a pure telco, it will not get these valuations for sure. All right. But putting the tech part of it, then you could conceivably trade at about, maybe 10, 12 times revenues on a listed basis, let's say on NASDAQ or whatever, which gives you a rough ballpark number of 100, 120, maybe 150 billion. If the market is very strong, you get that kind of valuation upon the listing, which might be, 2 years out or 3 years out.
There have been multiple positives which have emerged from the stock. One is the phenomenal execution which they have achieved over the last so many years. And second, obviously, is the promise they made about being debt-free. And even during COVID times, when people were not expecting it or expecting it the least, they managed to do it. I would be in the camp that it would consolidate for some time. But I think it's now in a fairly good trajectory with all its businesses firing. So I would not be writing it off completely. I think it's just a consolidation phase.
Well, on that note, we'll slip into a short break. But on the other side, we'll get you a ground check from Jaipur to understand how the COVID-19 has hit the gems and jewelry sales. Stay with us.